Well, folks, I'm here with you. Surprise, I was supposed to be in Las Vegas at the FinTwit conference, but Delta Airlines canceled my flight last night and couldn't make it. The next flight was going to be late tonight, would have missed the whole conference. So here I am back in my office doing the pre-market prep, and there's a lot to talk about. Boy, my gosh. Well, the first question is this going to be a bear market rally? And I don't know the answer to that. But I will tell you, if it is going to be a bear market rally, where my targets would be, where I would significantly pull back, and that's at the 20 DMA here on the Q, around 315, we'll call it. That's the first target. Of course, it could always do a little better. You saw what this bear market rally did, but I'm still pretty bearish longer term. And if I'm wrong, that's fine, right? If this ends up being the bottom, and in retrospect, you can see the bottoms in, and then you can go long. And that's why I'm not going to short. Okay. On these bear market rallies, what I'm doing is simply reducing my longs at resistance levels and selling covered calls. At this point, I don't think it's worth it to short aggressively. Now, one of the plays I had here was for a long time, I've been saying 275, 276 was my target on the NASDAQ. Earlier this week, I upgraded it to a range of 275 to 285. So it's possible the bottom's in, possible, but I just don't think it's going to hold with the macro situation. So you see it hit 285. And the other bottom I was looking at was 35 in ARKK. And in fact, I put this out as a trade of the week on the Twitter Spaces Wolf Financial Show. I had two trades for the week. One was buy ARKK calls or TARK when ARK hits 35, and the other one was buy DRIO ahead of earnings. So, wow, I think I got 2 for 2. I'm probably going to win that on Monday night. We'll make the celebratory rounds. Now, ARK hit 35.10, not 35 on the nose. That's close enough, though, but I did not buy it. I was scared. I waited for confirmation. Once it got to about 38, I got into some call options on ARK January, I believe, or December. So I got some time with some nice size also in case that does mark a bottom or the bottom, possibly for ARK. There's another level. One of my colleagues is looking at 31, so left a little firepower in case it does go to 31. I may buy more of ARK. So that turned out so far to look like a spectacular entry for me. Um, Now, before we get into the big news with Twitter, I just want to mention PTE because it's a fast mover here in pre-market. I mentioned this when it was 19 to 20 cents, up to 25 cents. They got a FDA designation for regenerative medicine, advanced therapy designation. It's something like a fast track status, basically, similar to orphan drug and fast track status for this regenerative therapy. So, in any way, this is a stock brought to us by Matt, called within our community. Look, it's right on. Advise that maybe if you got in 19 or 20, and that's a resistance level. We're looking to hear from Matt for his thoughts, but really, this is probably a buyout at some point. I don't want to see this. If I was in it, I'm not in it. But if I was in it, I'm like, I don't want to see them doing like a toxic financing with warrants, which you're going to have to do when you're a penny stock like this. I'd rather they sell the assets to the highest bidder. But we'll see. Something to monitor. And when Matt chimes in, who knows? Maybe I'll try to buy some dips if it gets back to 20 cents. But I'm not doing much trading lately on catalysts and headlines. They just sell off very hard. Okay, Twitter. So Twitter, man, I got a little bit lucky. I wish I was more vocal about this in the rooms, but take a look at what happened earlier this week. To talk about Twitter, I got to first talk about Apple. Apple earlier this week went below the 50-week moving average, and I've been talking about this for a while as a critical support level for Apple. And when I saw that go below the 50-week moving average, I went into a little bit of a, I don't want to say panic, but I started acting very fast in terms of capital preservation. And I said, let me sell off anything that's risky that I still may have. Let me get into a little hedge, which I did earlier this week. But then I did close it out, but I made a little money on the hedge. But the primary move I did was get into cash and anything which I thought was a little bit risky. And I went through my list. I'm like, Twitter looked like the riskiest one, especially because at the same time, the Apple went below the 50-week moving average. Twitter went below the 20-day moving average right here on that candle. So I'd made a decision that day to sell all of my Twitter, close out all my covered calls, and I guess I got lucky. Elon Musk coming out here today saying that the deal is on hold and the the stock crashed, you can see, and it rebounded an hour later when he said he's still committed to the acquisition. So Elon is making everyone crazy, giving everyone on Wall Street lots of stress who are in this. I'm glad I got out. Now, at the same time, you can see kind of a pair trade here as Twitter, as news gets worse, possibly any bad news for the Twitter deal closing, and you see DWAC going up, and then again, you see it dropping when Elon Musk says the acquisition is still committed to the acquisition. So something to watch. By the way, DWAC I think is completely overvalued, but it's gaining momentum. The app, Trump has 2.7 million users now, followers, 2.7 million followers. That's iOS only. The web app is due to come out, if they're on time, later this month, and then they're going to have Android. And the app is relatively stable in terms of speed and responsiveness. Could always be better, but it's much better than it was during the beta phase. So I'm not trading it, but you can understand if DWAC went on some squeezes here anytime there's bad news on Twitter. Now, CFVI is what I am in, and often you get a sentiment boost, and you see that when DWAC goes up, CFVI goes up. Of course, I had a bad day yesterday. CFVI also filed a amended, what's the name of the filing? Amended S4, I think it's called. This is regarding the merger. So they did this amended offering, which it seems it's like pushing back the combination date. Now they're saying early Q3 before I think it was supposed to be Q2, but it's really dependent on the SEC approval. And I don't know, man. SEC is dragging their feet on the CFVI deal. They're dragging their feet on the SEAC deal, SEAC. SEAC also filed an amended S4 filing in relation to the reverse merger. And you can see this is getting killed. That's a $2 buyout price there, and it's trading at 84 cents. So got to monitor all of that. Now, DRIO killed it this morning. So far, two analysts came out. One of them is on here in the newsfeed, Alliance Global, coming out with a buy rating from hold to buy. I don't have a price target. Then there's another one that's not in the newsfeed from Craig Hallam, reiterating buy in $18. And the comments from Craig Hallam, very similar to what I'm saying. I think DRIO is now at an inflection point in the business, both qualitatively and quantitatively. And what I mean by that, qualitatively in terms of the progress they're having with insurance companies and employers, and now most of their business is B2B instead of B2C. And quantitatively, because you saw a big quarter-over-quarter sequential growth in revenue, you saw gross margins dramatically improve. Really, they're ahead. They beat the highest estimates on revenue by 7 analysts. They beat the highest estimates on earnings, which is still a loss, by 7 analysts. So on track, but possibly ahead of track to get to cash flow positive by early 2024. And there's a lot of optionality upside that's not included in their current guidance. All right, they're talking about they have $42 million of employer business for this year. I have to get clarification on what they mean. Is that the run rate by the end of the year? Is that the 42 million for the whole year they're anticipating? So we got to talk to Erez and get some more details. But then they have an additional 10 million plus book of business coming from an expanded relationship with a national insurer, which seems set to close hopefully in this quarter. They have the Sanofi deal bringing in another $8 million. I mean, these guys are firing on all cylinders. And I think that storyline of DRIO taking business from the chronic health management portion of Teladoc may ring true among investors. I think sentiment's going to increase. People may start seeing this as a leader, as a mini Livongo. Inflection point is here, both qualitatively and quantitatively. Of course, the market has to cooperate, but hey, let's look at some levels here. It broke the 20 DMA yesterday, intraday, closed right on it, pulled back, closed right on it. In pre-market, it's above the 20 DMA because of these analyst upgrades and because the market's up. So 50 DMA is about 585 for today, 557, maybe 585. Yep, around 585, let's call it. So I think that there's a clear chance this is going to challenge 585 today. It's kind of hard to imagine a tech company or a health company or growth company breaking the 50 DMA here, because that would be so bullish technically in such a bad environment for growth stocks. So I'm not going to go out and say predict it's going to break that 50 DMA, but boy, if it does, this is really going to stand out of lots of other tech companies as one that's bucking the trend, and the technicals are getting better, and who knows where it goes from there. But this is a long-term hold for me. I've been buying shares ahead of the report. I bought shares after the report. All right. I want to talk about Kodak. Kodak, I've lost a ton of money on. Been terrible. Possibly, we will see. Let me just show you this. This huge insider buy. Okay, this huge insider buy right here. Okay, was 2 days after the earnings report. 2.7 million shares. The 2 days was because of blackout period rule. So you take that same formula here, 2 days. That means today insiders can buy again. So we'll have to see if insiders are doing that or not. Make sure my audio is on. Yeah, it's working fine. Okay. So that's the story with Kodak. A little bit of possibly hope, for glimmer of hope for something that may happen today. But yeah, I'm not lying to you. I am getting murdered, killed, destroyed on Kodak. I also took too much risk on this, broke some of my rules, over allocated. So hopefully we get back into the 450 range at some point, and I can resume selling covered calls to claw myself out of this hole I dug for myself on Kodak. So that's the story here. Let's check out some news here. If there's anything new that came out in the last 15 minutes since I last looked here. Don't see anything important that we didn't cover. So lots to bite on, lots to research, lots to look at. You can look at PTE, you can look at DRIO, maybe DWAC and CFVI or some trade ideas. But most importantly, be careful out there. I think the macro is not good yet. I'd rather miss the upside, right? I'd rather recognize the bottom 3 to 6 months later and then kind of go all in. So I'm going to play cautious. And when we hit resistance levels, there's another one at 310 here. If we get 300, it's probably a psychological resistance level. So I'm going to be looking at selling covered calls, 300, 310, 320. And that's my playbook. Good luck, everyone.